Mientras tanto, seguimos vigilando la escena, subidas en Wall Street, también en Europa, y mientras tanto posamos también la mirada en el análisis internacional. Nos acompaña Edward Moya, es Market Analyst and Marketpulse and Oanda. Edward Moya, thank you so much. Good afternoon from Spain.
Thank you for having me.
Edward, all eyes are on the CPI report that will be released tomorrow. This data in the US will be important for influencing Fed's decision, next decision in February. What do you expect?
Well, expectations are high that we're going to see disinflation trends continue. I think there's a lot of people on Wall Street that think this could be the last inflation report that we see that's followed up by a Fed rate hike. And I mean, there's, I think, strong hopes that the Fed will just need to deliver one more rate hike after this report. And I think you've seen a lot of weakness in commodity prices. Energy prices have been coming down in December. So there's, I think, high expectations that we'll see further weakness here. But I think we have to pay close attention to core, because core prices could still tick higher. And there's still much more inflation fighting that needs to be done. So I think markets might be getting ahead of themselves.
And Edward, the upcoming earnings season will be important too this week. Banks will be the first to publish its results when layoffs are taking place in this sector. Should we expect any surprises?
I think that's going to be a strong theme for this earnings season. I think most corporations, especially the big banks, they're going to be cost cutting. They're going to be focused on making sure that they kind of trim some of the fat, as they say on Wall Street, because there's been a lot of hiring that's been done throughout the pandemic, and I think you're going to see trading volumes are going to start to come down. I think you're going to probably have expectations that the consumer is weakening. I think this earnings season, people are going to pay very close attention to the banks, because they're going to go over, how are savings doing for the consumer? How's credit card delinquencies? And I think we're going to start to really see that while, yes, we still have a strong labor market, the consumer is showing more signs of weakness than a lot of the data points are suggesting.
And what about technology? Because in this sector we are seeing a lot of layoffs too.
Interest rate sensitive sectors are getting crushed right now, and I think tech, you have to take a look at most of these layoff announcements. If it's a mega cap tech company, chances are that they've been having robust hiring throughout several years. So for instance, like Amazon's wave of layoffs, while it's disheartening, I think it's still showing you that this company is still going to be one of the stalwarts. I think they're going to still continue to have long-term profitability in mind. They're just right now, everyone's kind of they overbuilt themselves, I think, over the past couple of years. So you're going to see more layoff announcements. If you're a company that is going to have a rough patch this year, I think the first quarter is when you announce these layoffs. So I think this should be well expected.
If we talk about investing opportunities in this moment, now that we are starting a new year, which sectors, companies, regions are you looking at?
Well, it seems like right now, all of a sudden, everyone's looking at Europe. Europe was supposed to have a severe recession, global energy crisis, fears that the war in Ukraine would really weigh on their economy. And what we're seeing is there's a lot of a momentum here that you're probably going to see. Some of the data points, and there's still a lot of issues there. I mean, you have strikes in France, there are going to be strikes in London, but I think there's a lot of optimism here that Europe is going to outperform. I think a lot of people too, they're expecting that this China reopening momentum is going to be a strong story that should bolster Europe up pretty significantly. So I think one of the other trades, and I kind of highlighted it just now, China. Growth was supposed to be a lot weaker this year. And I think what we're seeing is this reopening is happening a lot faster. We're still expecting the PBOC to ease. So you're probably going to have more, I think, momentum with Asia. I think this is going to be one of the key markets that investors are going to focus on, especially in the first half of the year. If this COVID reopening doesn't have any major setbacks, you're probably going to see that investors are going to be overweight Asia, and China is going to be a big part of that.
Thank you so much, Edward Moya from Marketpulse and Oanda. A pleasure, as always.